Imagine waking up tomorrow and gas prices in the United States have jumped overnight, not by a few cents, but dollars. This isn't a random spike. It's because of one narrow waterway that's located thousands of miles away. If this narrow waterway shuts down, gas prices in the United States could rise within days. The narrow waterway is called the Strait of Hormuz. It is the most important oil routes in the world. On a daily basis, 20% of global oil passes through this narrow stretch of water between Iran and Oman. The Strait of Hormuz looks small on the map, but it controls a massive part of the global energy supply. Let me tell you why this particular strait is always at risk. This region has always been tense, with political conflicts, military presence, and power struggles, making it one of the most fragile routes in global trade. The Strait of Hormuz is the strategic global oil flow channel, through which oil and goods are supplied across the globe. A little distraction and disruption in the strait could have dangerous consequences, which is harmful to the global economy. Now imagine that the route is suddenly blocked. Ships stop moving, oil supply drops instantly, and global markets react within a short period of time. This is not a slow process. It's an immediate effect that will lead to global oil shock. Global oil shock. Oil prices are extremely sensitive to supply. When supply drops, prices surge. In a situation like this, oil prices could jump dramatically within hours by 50 cents to $1 per gallon. And once that happens, the effect could lead to a severe shutdown, though some analysts predict that prices could reach $5 to $7 per gallon in extreme cases. Do you know why the US still get hit? It's assumed that the United States is protected because it produces a lot of oil. But here's the reality. Oil is traded globally. Even if the United States produces oil, it still buys and sells on the same global market. So, when global prices rise, Americans feel it almost instantly. Within days, gas stations across the US begin adjusting prices. At first, the increase might seem small, but it doesn't stay that way. A moderate disruption could push prices up by 50 cents to $1 per gallon. But a major shutdown, that's when things get serious. Quickly, let me tell you what will happen in a severe scenario. Gas prices could climb to $5, $6, or even $7 per gallon. And that kind of increase changes everything. Panic makes it worse. This is what most people don't realize. Panic makes the situation worse. Markets react not just to reality, but to fear, and the possibility of disruption can push prices higher. Do you know the hidden impact? Higher gas prices don't just affect drivers. They affect everything. Food prices rise because transportation costs increase. Shipping becomes more expensive, and everyday life becomes more costly. The long-term effect. If the disruption lasts longer, the impact grows deeper. Inflation rises. Businesses struggle. Economic growth slows down, and millions of the population begin to feel the pressure. Quickly, let me tell you why this matters. This is the reality of a closely knitted, connected world. A world of interdependence and interrelationship. A single route in one region can affect millions of people across the globe. However, the Strait of Hormuz may seem far away, but if it shuts down, the impact could reach the United States of America. Subscribe for more videos that break down global events and how they affect your everyday life.